Good afternoon, everybody. It is Thursday, the 22nd of February. And this morning, the Financial Times published a story saying that Jeremy Hunt draws up plans for a 99% mortgage scheme. Now, there's a lot of reaction to this very, very quickly. And I know that actually one of the big questions everyone's asking is this going to change the trajectory of house prices? I'm going to come on to that in a minute. First of all, there is already in place a 95% government-backed mortgage guarantee scheme where the taxpayer is effectively guaranteeing people's mortgages. That's already in place. So this is, but 5% deposit is quite a lot to save up compared to a 1% deposit. Now, I've got Lewis Shaw with me waiting in the wings, who's a licensed and qualified mortgage broker, mortgage advisor, financial advisor. But I just want to start with this. There's nothing wrong. Can you all see me? Can you guys, I'm sorry, I'm having real tech problems this afternoon. Can everyone hear me okay? In principle, there is nothing, and I do have a cup of tea actually. Sorry guys, sorry, let's get on this. If a young family wants to buy a home to stay in it long term, and a 99% mortgage enables them to do that and to get out of rented. And if it's affordable, if it's within the affordability criteria, so it's costing the same or less than their rent would cost. And critically, if they are assuming the risk if it goes wrong, in other words, if house prices go down and they need to move and there's negative equity, if you as the buyer are assuming that risk, you're going to be more cautious in your purchase. You're going to be more cautious about not overpaying. And you're going to engage in that purchase knowing that if it goes against you, because there's a very high risk or a much higher risk of negative equity with a 99% mortgage than there is with a 95% or a 90% mortgage, you're going to be more cautious. But if the government comes along and says, we're going to take taxpayer money, and if it all goes tits up pear-shaped for you and you can't afford it and you lose your house, there's negative equity, you can walk away scot-free and the government will pick up the tab. The problem with that is that you end up with people taking out mortgages who otherwise wouldn't have been given mortgages by the lenders without the guarantee from the government. So it's not that in themselves a 99% mortgage is a terrible idea. It's where does the risk lie? And if you move where the risk lies, does it change people's behavior? And does people's change of behavior lead to greater risk for society and government finances and taxpayer and future affordability of houses? This is the problem. So I'll bring Lewis in now, but let me wrap up with this. My problem isn't so much with the 99% mortgage as it is with a government-backed guarantee. Now, I haven't asked Lewis what he thinks. Lewis, welcome. How are you?
Yeah, I'm good, thank you. I'm great. It's a bit of a miserable day for a Thursday. The weather's not great, but yeah, it's good. I managed to get all my applications in at the start of the week as we see lenders reprice. So we've had a number of lenders repricing upwards. So thankfully, my clients have avoided that through shrewd Lewis moves.
Shrewd Lewis moves, I like it.
That's the one. But yeah, all good, thank you. How are you?
Yeah, not too bad, not too bad. I keep getting my days messed up with these unexpected news announcements. I had other plans today not to do this, but I just felt this was worth going through. And I wanted to just get a couple of points in here, because in this article, blah, 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 what the government says. Neil Hudson, who is a housing market analyst, I rate him pretty highly. I don't know if you do as well. I think you probably do.
I do.
Who says there would be a greater risk of negative equity, obviously, with this. Okay, that's never a good thing. You'd also be paying a premium mortgage rate. Okay, but That doesn't mean it still might not be less than your rent. And it doesn't necessarily address the problem of high prices. Well, it certainly doesn't address the problem of high prices. In fact, arguably it can make them worse. Lucian Cook, head of residential research at Savills, warned that any scheme that boosted buyer numbers would need to be matched with measures to increase the supply of housing. You might be addressing the deposit affordability issue, but you're still left with the mortgage affordability issue and, of course, the supply issue.
Mm-hmm.
One industry figure warned the cost of the loans would likely be higher than lower loan-to-value bands. That's pretty much a given, isn't it?
Yes.
So this is where I am divided on this, because it comes down to the reasons for the borrower's decision, as in, if it's helping someone get a home that they want to stay in for the stability of having a home, and they assume the risk themselves, and it's not costing them any more than it would to rent, well, they're not going to be causing, because they're going to be paying carefully and not overstretching themselves. You're going to be much more careful about that if you want to stay long, because you're also unlikely to face the risk of, oh, hang on, it's 2 years later and I've got to go. And the other thing, of course, is that what are the rates going to be on this, and how long are they going to be fixed for? And are there going to be negative equity traps on the back of government-backed ones? And are there going to be people who go, and this is what happens, isn't it? You get people who go, there's literally no risk to me of doing this compared to just renting. There's no risk. If I use this government-backed guarantee to get a 99% mortgage, I might get on if the housing market goes north. Woohoo! Free ride. And if it goes south, I can get off and it hasn't cost me anything. That's the issue. That's the issue for me. So, what's your take on it, Lewis?
So my take on this is that well, you're right in everything you say so far. I have an issue with it being 1%. I do have an issue with it being 1%. I don't think there's enough skin in the game. That said, a broker, Adam Hosker, mentioned on Twitter a little earlier that actually defaults, bankruptcies, repossessions happen at all loan to values, but not necessarily just high loan to values. So that's the first point, is in, yes, it increases the risk of negative equity, but it doesn't necessarily increase the risk of all the other things that can go wrong with buying a home.
The affordability problem.
Yeah. Now, we do know that for many people, the biggest issue is often the deposit. So there are many people that don't have access to the bank of mum and dad. There are many people in that position. And for those people that are stuck paying exorbitant rents and really kind of being rinsed through their eyes with, private sector landlords, if that enables them to break free of that trap, then that's a positive. So I should probably say at this point, because of course this is going to be a political, essentially it's a political discussion. So I have a big want to see more people own homes, because I think that's positive for people. I think there are many, it's a multifaceted thing, but there are many benefits from people owning homes, all the way from, for example, reduced crime levels, increased social mobility, better mental health, better chance of kids. Better chance of having kids. There are so many benefits to people owning homes, and if a 1% mortgage is the way by which someone accesses that, then that's great. However, we do have to be mindful of the risks, and there are numerous risks.
Yeah.
The main one being, as you rightly pointed out, especially in such a volatile economy as we've got right now, is going to be negative equity. That said, if the scheme is designed in such a way that it tries to minimise that, so for example, if someone came to me today and said, design a 99% mortgage scheme, what would I do? I would say, okay, that's fine. We need a minimum of a 5-year fixed rate, if not 7 years. Mm-hmm. We need to cap income multiples at probably 4 times as a maximum in the background. People need to have A1 credit history. That goes without kind of saying, really. And then we need to ensure that they have stable employment. Now, again, there's going to be an argument there about employment versus self-employment. I know that self-employed people often get screwed over in these scenarios. I know that, I'm aware of that. And that's not to say that that's what I agree with. But when you're designing a mortgage product, you have to take these things into account. So I would happily support a scheme if it had enough checks and balances, whereby if you assume, bearing in mind the rates, if you assume that at the end of that 5-year fixed rate, they're going to have at least 5% equity, ideally more, then I don't have as much opposition to this as perhaps other people, because I see people on a daily basis, I speak to people on a daily basis that want to buy a home and don't have, they can't match and they can't compete with people that are working from the bank of mum and dad. So I speak to people all the time that are buying homes at 250, 300, 350,000 pounds as a first time buyer, and they've got 50, 60, 70, 100,000 pounds deposit that's been gifted to them. Now, if you're just a guy that doesn't have that support from the family, you're working, you're doing your best, and you're paying through your nose in rent, it's almost impossible to compete with that. It creates, the Bank of Mum and Dad creates a very, very two-tier society, people that can buy homes and people that can't buy homes. And these people want to buy a home, they can afford the mortgage, they can do everything they need to do, but they can't get that deposit together because they just can't afford it. And yet they're paying more than the mortgage might be. So for those people, it's a positive. Now, my concern is, the biggest concern is this is a political play, and any mess from this will have to be mopped up by the incoming government, which is almost certainly to be Labour. Not to preempt things, but that's the likelihood. And that's my concern. In terms of, there are concerns about whether you've got enough skin in the game as a person, but then there's concerns about, have you got enough skin in the game as a government? Yeah. And I don't think they do have, especially at this point in time.
So, right, I think we're broadly in agreement here, because I definitely think that someone who's earning enough to be able to, in a stable job with a good credit history, and who is buying for long-term reasons, and this is where I think is a problem. I think if you see this product as a step onto the ladder, and then in 2 years' time you want to move, you're not going to manage that. I mean, just the moving costs. If you can't afford more than 1% deposit, 2 years from now, I mean, unless prices have gone stratospheric, we'll come on to that in a minute, you won't be able to afford the moving fees, you won't be able to afford the moving costs. So you'll be stuck where you are. And if life takes a turn that you're not expecting, it could also cause a problem. There are people, exactly just as you described, though, for whom they're going to say, well, that risk is no worse than my current reality, and therefore it makes sense to do this. And that's okay. That's okay. The problem is, the other problem we haven't touched on, which Lucy and Cook touched on in that Financial Times article there, is that at the moment we've got problems where there are hotspots of demand, and then you've got places with high demand and places with low demand, and it's going to exacerbate price pressure upwards in the places where there already aren't enough places. And it's going to make homes in those places go even further out of reach as it pushes prices up. Because if there are places this has a larger than average uptake in some areas than in others, of course it's going to have an effect on prices. Now, how much it has depends on all kinds of conditions. We're yet to see the details of this. And at this stage, they're just dropping a hint, aren't they? In the article, they say, let's be clear, nothing's guaranteed, nothing's agreed, nothing's set in stone. And I actually downloaded the Mortgage Guarantee Scheme. I've linked below to the Mortgage Guarantee Scheme Rules PDF, which is 54 pages of, I mean, if you're having trouble getting to sleep, take a look at that 54 pages.
Yeah, I mean, I've read that because I'm sad and I do things like that. But I've read that, yeah. It's quite fun.
But, I have a bigger problem here, which is it in the interests of society to assume this downside risk? Well, The upside is you get more people with more stable homes where they get to not be bumped around by landlords and they can actually get on with their life. So maybe there is an argument if it was really done. But the trouble is that these systems are always abused, and often by the wrong, not the people they're intended for. So a question I had for you, Lewis, is: are you aware of similar schemes in the past? I mean, is this going to be like strictly residential only, like no buy-to-let stuff?
Well, it would have to be only residential.
Yeah.
You would think that that would have to be the case because buy-to-let carries a much higher deposit requirement, and buy-to-let, I should mention, isn't regulated in the same way as residential mortgages. So you would expect this to be only and exclusively residential. Now,
But I can still see youngsters using it, saying, "Oh, I'm buying it to be my home," and then renting it out.
Well, you would have to, again, in terms of criteria, that would have to be a big no-no. The biggest driver, in my opinion, of house prices, excluding, so if we go back pre-COVID, the biggest driver of upwards house prices was undoubtedly the Help to Buy scheme. And that was designed to help first-time buyers buy new builds with a 5% deposit. And that was abused. Without a shadow of a doubt, there are lots of people buying new builds that weren't first-time buyers because that wasn't a mark of the criteria. It did come in later. But initially, when the Help to Buy scheme was launched, all it did was to help fuel prices upwards. It also added billions to the bottom line company profits for major house builders.
Yeah.
So if this is going to become reality, I hope that they take account of that, and it is exclusively for first-time buyers. By that I mean someone that's never owned a property anywhere in the world.
Yeah.
That there is no possibility of opting to rent that property out in the future, and that there are serious checks and balances to ensure that it isn't exploited. Now, you can't regulate everything, and there are always going to be holes that people fall through. There are always going to be loopholes. But if we can iron the majority of those out, then it could be useful. And now I'm not suggesting that I don't think that 1% deposit is enough. That's my personal opinion.
Yeah.
I don't mind the idea of reducing deposit levels. For example, in the US, the minimum deposit level, as I'm aware, is 3%. I don't mind going down to that level, or for example, 2.5%. I think 1% is too little. Yeah. And yes, it would put upward price pressure on house prices in areas that are already oversubscribed. However, these conversations often tend to focus around London. Let's be honest. The vast majority of political commentators and journalists tend to live in London. And there's a big UK outside of London. And there are people that I know that are paying £900 a month in rent. They'll be paying £700-800 a month for a mortgage if they could buy a home with 1% deposit. So we've got a very distinct separation here between people thinking about 99% mortgages in London, yeah, and actually how it could help people across the rest of the UK, of which there are millions of people.
Yeah. Okay. Listen, we've got loads and loads of questions and comments and observations. Jamie Bowen on the screen says, this will be promised for the election, then disappeared after the election. Yeah, you might well be right. I mean, this is often, again, it's just political posturing. I mean, they kind of hinted a few times they're going to do something, and they've said that this might be in the budget. And I think this is their way of going, let's just put it out there and see what the reaction is before we commit to it in the budget. TMS says, I don't think 99% mortgage makes much difference when what they can loan you is based on a salary cap. That's true, isn't it?
Well, it is, but again, this focuses on London. So I do a lot of business in London. I do, but in proportion, London is my single biggest area that I arrange mortgages for. But that accounts for probably 35%. So 65% is outside of London. And the vast majority of people outside of London aren't hitting salary caps. They aren't hitting loan-to-income multiples.
Okay.
Because, so what might cost £500,000 in London for a 2-bed flat might cost £200,000 in other areas of the country.
Yeah.
So yes, there may be an affordability for 99% mortgages in London specifically, or the South East will group in there as well. That doesn't necessarily hold true for most parts of the UK. So, I get where they're coming from in terms of, yes, that would make a difference, but it would have an impact. But for the vast majority of the people that I deal with, 65%, specifically first-time buyers, they are nowhere near the cap.
Lewis, we've got lots and lots of questions, and I really want to try and whip through them if we can, like just a few seconds on each one.
Sure.
We've got our friend Ian here, who says a great idea if they're flexible long-term fixed-rate mortgages, otherwise a systemic risk. Yes, I don't disagree with that either. I think if you've got long-term security, but in the short term, it is a systemic risk. I agree with that.
That's true. That's true.
4.5 times lending criteria means there's literally no market for this product. What do you think that means?
That's as a single person, yes, but as a couple, as most people are couples when they buy, that's not the case at all. That's just not the case.
Andrew Lamb says, do you think this will be implemented if the government win the election or implemented for the election? So my response to that, Andrew, is that I think that they're going to, I don't know, actually, because they could have it as a sprat to catch the mackerel, which is, if you vote us in, then we will bring this in after the election. But because I think they already know they've lost the election, I think that, I don't know. I don't know. It's a good question. I actually don't have an opinion either way. Probably, yeah, they'll bring it in for the election, and that Labour clean up the pieces, won't they? Do you have a view on that?
Yeah, I would assume they would be a case of we'll bring this in and then let someone else deal with the consequences. That would be my because that then plays politically, doesn't it?
I mean, they're going to be getting political pressure from lobbyists and donors saying, "Could you please do something right now because we're stuffed and we're dying." The house builders and stuff, that kind of stuff. But they don't normally sort of implement it instantly when they do this stuff, do they? There's always like at a date in the future.
Yeah.
TMS said 99 mortgages and nothing burger. I think you might be right, actually. It depends on the criteria. It might just be something that doesn't actually hit enough numbers to make a big difference. And by the way, that reminds me, Alex Groundwater, who couldn't be with us on this video, shared this graph on X. Which is quite interesting. Look, and it shows this is the amount of equity withdrawal from properties starting at 0 there, and it goes positive or negative. And so going back to whatever it is, the 70s there, a little bit in the 80s, and it came down again. And then the mad money days, so around about the late 90s, and it took off, and there was this period of really massive equity withdrawal. Tens of billions every year coming out in equity withdrawal.
It would be interesting to map onto that the growth in inequality. Yes. I suspect they're probably pretty close.
But look at this. What's really interesting is down here, right down here, look at this. So the equity withdrawal is down at its lowest level. So it's actually people putting equity back in, people paying stuff down and not borrowing. And he asks the question, is this why the 99% mortgage is being discussed? Because people are actually borrowing less, and the net borrowing has gone negative now. People are paying stuff down as fast as they can.
Possibly. I mean, that could be a factor. I don't think it probably is, but I don't think the politicians are probably that engaged and informed, in all honesty. But
Andrew Lamb makes the point, it's also worth pointing out, on the 95% mortgage guarantee scheme, it covers 95% of the loss of 15% of the value of the property. So not the full value of the property, that's true. But you never lose the full value, innit? When you go into negative equity, it's always 5, 10, 15%. So in other words, the bank has covered themselves. They always do. They always do.
But then equally, the banks always do cover themselves. Of course they don't do, because they're commercial entities. They're not public services. I think we sometimes miss that. They're there to make a profit. And but Lewis, there's a balance, right? I mean, making a profit because you're helping people is great. Making a profit at the expense of people's lives and life chances is not okay. That's where the balance goes wrong. And I hear this story, they're there to make a profit. Well, okay, but at what point? I mean, Lloyd's announced, didn't they, today? They've made
7.5 billion record profit last year, in a year when arguably everyone else has got skintier than they've been for decades, because they didn't give savers the higher rates. They did get profit on the back of the higher borrowing rates. And, I mean, of course they're there. They've got shareholders. They've got people that they want to give a return to. And I have nothing wrong with that. I've got no problem with it. But it's when you take that approach, which is tough shit, it's business.
Well, if you want a different economic setup, I'm down for that. You probably know me well enough, Charlie, to know that I am down for that. But whether everyone else is, I don't know.
I just think it's just a little bit out of kilter. It's a bit out of balance, because actually it comes down to the policymakers and certain people just going, well, tough shit, you shouldn't have done it then. Rather than going, there are a lot of people who don't deserve it getting really stuffed over here. For example, people who can't afford a house, not because they haven't saved, not because they haven't worked, because house prices have just escaped them.
Well, yeah, exactly. I mean, it is a bad idea to bring in higher loan to value mortgages without addressing the basic problem of we've got apparently a population that is growing, and we don't have the stock to keep up with it overall. I know there are pockets where there is under what's the word I'm looking for? Basically where enough people aren't living in the right house, and where too many people are living in a house elsewhere. So I know that happens, but nevertheless, if we don't address that issue as well at the same time, then of course we're going to have a problem. But the problem is that there is no magic bullet for that. I mean, again, when I said at the start, this is a political issue. So we need builders, we need tradespeople, we need lots of people to come in and actually do jobs in the UK. And there are plenty of vacancies, even though that number is reduced. There are still plenty of vacancies out there. Yes, there are job losses in other companies, like for example the Body Shop, which is unfortunately closed or closing. But nevertheless, there are certain skills that we do need and we are lacking. So if we were to open the doors to people that can do that's going to put pressure on obviously on immigration. We're going to increase the population, etc.
I think no one disputes the fact that it's harder as a younger person entering the workforce now. The prospects of home ownership are further away than they've ever been, through no fault of that young generation.
Yeah,
and that's where I think there's righteous frustration. Now, okay, so I want to wrap this up actually, which is on the last point, which is what effect might or would this have on house prices? Now, until we know exactly what the criteria are, until we know exactly who qualifies, who doesn't, whether it's for new build or only or not, what restrictions they put on it, there's no way of actually knowing. I mean, the 95% one was people went, oh, house prices are going to go shooting back up, and they didn't. And I think still the banks are not going to just lend willy-nilly here either. They're still going to be looking at your affordability. You still need to afford the mortgage payments and need to have everything else stacked up. It's just a question of whether or not this leads to an imbalance of high-risk borrowing that wouldn't otherwise happen. And if that does happen, then that will have some positive impact on house prices at some levels. But whether or not it's enough to change the trajectory, I don't think it is. I don't think it would be for a while, for a number of reasons, because I think earnings are dropping, job vacancies are dropping. I'm not as you know, I'm pretty bearish on the economy and where it's going. And so people are expressing surprise now at how bad things are now already. Oh God, can you believe it? When it was just the war. It was literally the writing was on the wall for anyone who cared to look. And there's a lot more of that coming down the pike. And so, I don't think this is going to, even if it happens, but, let's wait and see if they do announce it, when they announce it, when it will be implemented and exactly what the conditions are. Then we can crunch the numbers and have a look at, is this going to make a difference or not? It makes a massive difference as to what rate it would be. I mean, can you tell us off the top of your head, like how much more expensive a 95% mortgage is than a 90% mortgage, for example?
So off the top of my head, I mean, you're probably looking at, certainly in terms of rate increases between 90 and 95%, you're probably looking at least a 10% increase in rate, right, generally speaking.
Yeah, okay.
So 99%, you would expect that to be 15, 20%, you would expect. But
So
the
sorry, you
rate
just clarify that. You're saying that for a 99% mortgage, you would estimate or expect that the mortgage payment or the rate would be 15 to 20% higher in terms of the actual payment itself.
from a
compared to
90% mortgage, yeah,
20%.
I'd expect the rate to be that level above, yes.
Yeah.
That said, for many people that are renting, that will still be low. Not always, and not it's going to vary county by county.
Yeah.
But for many people, that will still be lower than the rent that they're paying.
One of the worries I have is that I think a lot of people, when they buy places first time out, just have no idea about what maintenance costs. When you're renting, you never get
That's
that.
very true. That the old saying of a small house has a large mouth is never been truer, especially with rising energy bills, with rising food costs. Yes, that's true. And look, home ownership isn't for everyone. This is not to say that everyone should own a home, because some people are very happy renting, some people don't want to own a home. That's fine. But for the people that do, that aren't able to, and this is the problem. We're using a cannon to kill a mosquito here with a 99% mortgage, because there are a number of people that would benefit from the scheme, but there is no way of targeting those individually. So you have to kind of put it across the board. So that's why we always end up in these problems, or we'll end up in problems with this, because we can't target the specific people that are going, well, I'm paying £1,500 a rented, £50 a month in rent, and my mortgage will be £1,300, and I've got no plans on moving because I work there and my kids go to school here and all the rest of it.
Yeah.
They're the people that we need to target, but you can't do it in such a manner that you only pick out those people. So what do you do?
Kicking Mustang makes an interesting point here. Crush NIMBY's ability to dictate planning permissions by having an independent housing policy committee, much like the monetary policy committee. I actually agree with that. I think that housing should be depoliticized in the same way that the Bank of England. I mean, okay, there are people who argue that it hasn't, but as far as we're told, it is supposed to be independent from government, and I think housing policy should be the same, independent from government. I don't think it ever will be, but.
I have a lot of positives for that idea. The problem is that eventually you end up with, because we could say that about anything. So housing planning should be independent, migration should be independent, and eventually you end up with a political system where no one is actually in charge of stuff. So I get where that's going. And yes, it would be a good idea to depoliticize things, but then you just end up with an apolitical country eventually.
I mean, both parties have pretty much ignored housing for 30 years anyway. It's not like much would change.
Yeah, that's true. That's
true. So they've knocked into the long grass repeatedly. It just, however the system is set up, it is not set up in a way that makes politicians. I mean, every single government before the election says, we will fix housing, and it's got worse and worse and worse and worse. I mean, it's just, how did they, I don't believe that there was all of them just like were saying it knowing they wouldn't do anything. There've got to be deep problems that stand in the way of improving it. And there are plenty of suggestions to what those might be. But Lewis, I just wanted to have a quick video on that. Thank you very much. So should you just wrap this up for those of us who didn't join us from the beginning, who are here live now, and say that actually, because you said that you agreed with everything I said at the beginning, right?
Yes.
Which is that if the 99% mortgage product makes the difference for a young family to get into a home that they can stay in for a long period of time and get life stability, but they assume the risk themselves up or down, that's one thing. But where the government assumes the downside risk, but the buyer gets the upside risk, that's the taxpayer arguably potentially encouraging more reckless borrowing. And it depends on how long people's rates are fixed for, and it depends on how good their income and credit risk is.
So yes, the taxpayer would be on the hook, because no mortgage lender is going to do this without some kind of backstop from the government. That's clear. When we say the taxpayer assumes the risk, but also the taxpayer assumes the risk for not doing this. So there's an opportunity cost here. So, for example, we know that people that own homes tend to, earn more over their lives. they take less from the state, etc. So there is a downside risk from not doing it, because the more people that own homes, the better we have a functioning democracy, the better we have a functioning society, etc. So there is a downside risk. We can't quantify that, admittedly. So there is a risk either way.
Right, guys. Well, listen, again, for those of you who are new here, Lewis is one of my 2 hand-picked mortgage brokers who I work with to help those of you who cannot find a trustworthy broker of your own. I vouch for Lewis and also for Graham from Hudson Road, the other broker as well, that actually Lewis introduced me to as well. So if you want to talk to either Lewis or the other, or Graham and the guys at Hudson Rose, mhwc.co.uk/mortgage, where so what happens, Lewis? They'll just get to have a conversation with you first, and after that they can decide if they want to work with you or not. Is that right?
Yeah, that's yes. It's no obligation. Yeah, we don't hold anyone over a barrel.
Cool. No, so and yeah, I recommend these guys because I am here to try and help stop people being ripped off and stuffed over. On that happy note, everyone have a fantastic rest of your Thursday. And Lewis, thanks very much for joining me. To everyone else, I'll see you on the next one. Bye-bye, guys.